All right. How are you? So this is going to be the ribbon bounce, okay, and how it works and when you should be getting your trades in. Because you're going to be you want to do 1 minute trades. Um, Now I'm more of a 5 minute trade, but I do take 1 minute, but I prefer 5 minutes. But for you, I know you're looking to trade more, and I kind of want you doing that so you get used to using the system better. But in the long run, you're going to want to take longer trades. Okay. But you never know. We'll see. Well, here we go. We got the ribbon bounce. Let me go ahead and turn the auto scroll off. So we have our main white line, our secondary, and then the third. Now the third is like the long stretch, medium stretch, short stretch. Now I also have the fast one in here, which is this blue line and yellow line here. This is it so you can capitalize on in other marks like right here. Okay. And then I also have the linear regression. This is like a smoothing candle system. I don't know if you're familiar with smoothing candles, but that's basically what this line is. Instead of having to look at candles, you have a line. So this will help you see that, all right, we're on an uptrend. Okay, so you could possibly get yourself a trade in. But the main factor of the ribbon bounce is this. It came down and it got rejected. It came down and then you got one yellow here. So it got rejected at the main line. And just before this candle closes, 1 second, like you count down 5, 4, 3, 2, 1. And on that one, you put a trade in for going up. And then the next candle, you would have won. It came up, came back down, got rejected again. You'd get your trade in just before this candle closes. And then for 1 minute going up, came back down, got rejected. Get your trade in just before this candle closes, and you would have won. Now this isn't always going to happen, but it'll cut down on a lot of that blind trading. Like right here, where it went up, came down, got rejected, but the next candle lost. Okay. Now, I don't want to get into other things in regards to trying to get your trade back. I'm just trying to teach you the basic strategy, like because you can do more with this chart. But if you're going to be taking 1 minute trades, I'm giving you a basic strategy that you should always come out ahead. So here, we came up, we're going down, we're going down. It hasn't got rejected yet, and that's a small candle. Okay. And it made it below the line. So you actually wouldn't want to take a trade here because it spent more time trying to go down. So you would avoid trading right there with such a small candle. You're looking for a bigger candle like that, this. Let's see here. Because it's crossing. You never want to trade when all this stuff has come all together like that. This is a whole, we're basically going into consolidation and absorption. Okay. So you never trade when these things are so close together. You always want to see some width on these bands. Mm. So let's see, we came down and then it got rejected. So if you took a 1 minute trade here, you would have lost, and because there's a little bit of consolidation going on. But then you see it coming up, got rejected, so you would have lost that one. But you wouldn't want to take another trade. If you lose and you're in this kind of stuff that looks like this, you do not take a trade. But finally, it did come up, got rejected, to the main line because we know we're transitioning to a downtrend. instead of an uptrend like it was. So we'd be looking, because it came down past here, but it bounced here at this section and didn't make it past. But then it came up and it couldn't make it past this. So that means this is a strong point. It's most likely going to go down. So we'd be looking for a rejection to go down. Now that is a small candle. You probably would have lost if you got your trade in there. So during all this, we're kind of screwed. You don't really want to take trades, but you came down, got rejected. You can get one trade going up and you would have won. It came up, got rejected. So you could have got your one trade going down and you barely won. And then from here, we would basically just try to capitalize. Like here, boom, it got rejected. That's a big candle there. So the next candle will probably go up, you know. And it did. Came back down. But again, when these things are so close together, you want to avoid trading. You want to look for stuff like this, where it's nice and wide, and you're just catching the wave. Boom, bounce up, boom, bounce up. You know, so let's say if I was taking 5-minute trades. All right, it came over, it crossed the lines, came down, bounced. So I'd do a 5-minute trade. All right, so I'd be 1, 2, 3, 4, 5. That'd be a winner. Came up, came down, bounced. So I'd get my trade in probably right here because it's above the linear line. 1, 2, 3, 4, 5. That would have been a win. Came back down, bounced, saying I got my trade in right here. 1, 2, 3, 4, 5. That would have been a win. We're coming down, bounce for 5. Take my trade right here for 5 minutes, and I would have lost this trade. Okay, so now it's coming down. And I would actually avoid taking a trade right here because it came below the line, because it may bounce back and go down. So I wouldn't want to take a trade in between. We're looking to take trades above the white line when it's on an uptrend. So we would avoid here, wait for it to go all the way up, come all the way down, bam, it bounced. So you get your trade in right there. One, or at the end of, yeah, right there. So it'd be 1, 2, 3, 4, 5. And we would have lost because that's pretty, that was just one of those things. And then bam, it came up, and then bam, it bounced. 1, 2, 3, 4, 5. So after everything I just showed you, there were only 2 losses there. Everything else was a win if I was taking 5-minute trades. All right, now let me show you what it looks like on the downside. Okay, so we come right here, we're coming down, it crossed over. Because everything's so cluttered here, I would probably avoid taking trades here. There's not, I may take, uh, maybe I would have took a trade here for 1 minute, but that would have been a loss or tie. If I would have then here bounce, comes down. But again, there's so much going on with the lines here and lines there. It's just best to avoid this stuff because we know there's a transition here. Okay, this whole section right here is a transition of the market trying to figure out where it's going to go from here all the way over to here. We don't have any clear stuff. And then here we got this section for going up. So we've come across, we got a good distance between candles. So let's say we came up, we're waiting for it to come down to the line. It did hit one of my fast moving averages and bounced off with a big candle. So I'd do a 1-minute trade or a 5-minute, but for you, 1 minute, you would have won. Come down. We had a bounce. If you just got in, that could have been a win or it could have been a tie. Uh, but it looks like if you would have got in just before the candle closed, it looks like you would have barely won. And then we got coming down, bounced, and then the same thing. Now you kind of understand why I take 5-minute trade, because it bounced, but it takes sometimes a little bit more to get it to go further up. And then bam, it came all the way down, came down hard. These are big candles. And then it bounced, so you do a 1-minute trade up or a 5-minute trade. Came back down, bounced, get your trade in, you would have won. As it comes back down, it bounced. Get your trade in just before it closes. 1, 2, 3, 4, 5. You would have won, or on a 1-minute. All right, so you kind of get the idea. On this one, it kind of stopped and it bounced. So let's say if you did put your trade in there, that'd be a 1. You would have lost on a 1-minute. But let's see, 1, 2, 3, 4, 5. You would have lost that. I think we went over this section already. So let's find ourselves. So right here, this one would have been a loss if you did a 1-minute, but if you did a 5-minute, you would have won. And we got that rejection. So if you did a 1-minute, you would have won. 5-minute, 1, 2, 3, 4, 5. You would have won on a 5-minute. Coming down, waiting for the comeback. Okay, right there. 1-minute, you would have won. 5-minute, you would have won. Let's find a better downtrend. This is a little bit better here. So boom, we're coming down. Finding our way. We got a rejection right there. And we have 2 long wicks that it tried, but it didn't. So the odds are it's going to go down. So 1-minute, you would have won. Let's see, 5-minute. 1, 2, 3, 4, 5. That would have been a winner. As it comes up, take that, get your trade in just before it closes. 1, you would have won. 2, 3, 4, 5. Would have lost on a 5-minute. And then again, it's a bounce. So if you would have got your trade in here, let's just say at the end of this, you would have won on a 1-minute and you would have won on a 5-minute. Then bam, we're coming back up. All right, it looks like we got our bounce. If you took a 1-minute just before that candle closed, you would have won. On a 5-minute, you would have won. Now we're looking for, now things are getting kind of small here, so you want to avoid, these smaller movements and wait for a good long trend going down. All right, here we go, coming up. You got a bounce, but it's not really on anything, so we would avoid this altogether. And then here we go. We come back, we get our bounce. It's 2 Doge candles there as well. That's letting us know that it's an indecisive market. They can't really push it up and they can't really push it down. But we know it's not getting past this white line. So bam, you got that nice long candle for going down. And then you get your trade in just before it closes for 1-minute and you would have won. If this was a 5-minute trade, 1, 2, 3, 4, 5, you would have won, right? If you got in here, 1, 2, 3, 4, 5. Yeah, you would have won. So that's basically how the ribbon bounce works. Now, we have the linear regression line. So you can start looking for trades when you know you're in an uptrend. It comes down and then crosses over right there. And then go for a 1-minute trade going up. You would have won. So we're waiting, 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 waiting on the linear. Okay, here we go. It crossed over on the linear. So you could probably go for a 1-minute trade. Problem with this is when you get into these smaller areas, like right here, it could be really hard to get a good trade in because it's just so small. So you have to really look for the long trends when this stuff starts separating bigger and bigger. That's pretty much how this works. So there we go. We'll go back further. This is showing OTC. Okay. So here's a section like where it all crossed, it started trading sideways. So you don't really want to take any trades here. Once these lines start joining together, you want a good spread between candles. Like right here, boom, got rejected, going up, win. Boom, got rejected, going up. That'd been a win for you. I got rejected here. I would probably have taken a trade and this would have been a loss. And because I lost, I would probably avoid any trading going on right now until I get more confirmation on things. All right. Now, because we hit here, we came back, but we crossed. So, and then it didn't pass the green. So it's showing for more power down, plus it's below the linear line. So we know we're still in a downtrend. We wouldn't want to take a trade going up. So and that's why I'm real big about getting your account to where you can bet enough, 10 chances to get it right one time. Just by this strategy alone, you should never come out a losing session. You should always be able to come out ahead. There, there's there's so much there to be able to take a trade and win. And I don't want to keep this video too long for memory wise and uploading. All right, but I think that basically gives you an idea of how this ribbon bounce works. Like here, boom. Because we're inside the candles, we don't really know. I mean, you can try it on the whites and stuff. You'll learn over time to decide, you know what, I'll wait. Because with you using signal indicators, you're basically trading blindly. And you're doing this because you want to take trades. You want to take trades and get as many trades in as possible in a short amount of time. Problem with this is at some point that signal indicator is going to fail you um, if you don't have this kind of stuff going on in your head. So that's why I'm big about you got to learn these different markets things. You need to learn about consolidation. You need to learn about absorption. You need to learn about support and resistance, you know, and there's other things, patterns and stuff like that. And I don't expect you to learn all of it in a short time frame because it could be overwhelming and a whole lot more information and you just start forgetting other stuff. And that's one of the reasons why I created this ribbon bounce. Everything, when there's bouncing going on, these are high potential areas. That they're not besides the fast, which I don't recommend new people to use. Okay, let's get here so you could see. So this line and this line are my fast lines. These are extreme areas right here. So yep. So blue, I think that covers it. If you have any questions, let me know. And then if you need a video about a particular thing, just let me know and I'll upload it as much as possible. Like a particular indicator or something like that. Um, but we'll go ahead and we'll try to get a quick trade in just for you. Let me move this over. Okay. Now I do have pocket options open, I believe. Yeah, and we'll go over this here in another video that I'm going to create. But I'm going to move this to the top screen. I'm set for taking a $1 trade for 1 minute. And let's see what this does. Now it's kind of in a bad area, but we'll give it a shot. Let me zoom in. And currently Australian CAD is paying 62%. That's a rejection. It came down hard. And I'm betting that the next candle will go down as well by looking at what I have on pocket options. Plus it's passing the linear regression. So now because I don't have a timer on here, it makes it a little bit harder, but we're going down. I'm going to put in my sell. Looks like I might have got in a little too late. But we'll find out soon enough. And remember, these are 15-second candles. Now, by using this, I actually would have probably got my trade in right up in here. And this is why we wait to get your trade in just once on that last second. So your trade would have been in, or my trade would have been right here. But because the candle, I put in the trade because I couldn't keep track of the time frame. I didn't actually know when this candle was going to end. So I wound up getting my trade in somewhere right here. And as you can see, I won. Now we got a rejection. I'm betting it's going to go up one candle. So I'll do, let's see. And that's what sucks about. But it's not crossing here yet. So you don't really want to take a trade. And that's one of the things that'll help you too is having Heikin-Ashi candles. Like you could have this going up, but you're in the red down here, which completely contradicts this. You might just be holding out, but all right, so we're still showing for down. I'll take a trade for down, but I don't recommend. I'm not going to take it, not because of what this is here, but right here we already took our one trade down. So we don't want to take a trade until we see a bounce. So now like right here, there could be a bounce. Then we can add resistant lines. That'll help us for key areas. And you can add a channel as well. That'll help out. That's why I prefer the other monitors so I don't make this look so cluttered and it can get confusing. All right, so if you're not familiar with the vortex, right now currently the sellers are in power. There's a lot of pressure for up, or actually just a lot of pressure. It doesn't mean it's going up because even if it's going down, there's a lot of pressure. So when it's high up here, there's a lot of pressure for a direction. And then sarcastic is pointing for up. And we're two in on this one. But you can see how we're closing in here. So this might just be a small pullback here. And that's one of the nice things about using Heikin-Ashi on pocket options is there are different indicators where it could be like, hey, you get a signal that's saying for down, or let's say for up, or let me rephrase. Let's say the market's going down and you get a signal for going up. And that signal, let's say it was here, was right here, but yet it's in red. So you would have probably avoid that and then wait until you actually get some blue. But again, I when I use that kind of strategy, I'm usually taking a 5 minute trade, but I'm taking the trade when everything's been like truly absorbed. Like it's not going to go any higher unless the market's being pushed on purpose to get some money, and then they'll let it go down or up, vice versa, depending on what's going on. So we're closing in here. We'll probably start switching. I'm going to go ahead and put in a trade after this when this candle, but it could bounce right here or bounce right there. I'm trying to get at least one more trade in for you. And I'm going to put this at 1 minute just for you for real quick. So you see how everything's in the red here? If you wound up getting a signal for going up, you wouldn't want to take that signal because everything's clearly in the red here. But and I've had timers on here so I could see how much time's left, but I found every one lags, so I don't mess with timer over here. I use the timer over here to determine for the over here. And then I just keep track if, all right, this is what it's doing. I'm going to wait for that second. And you're going to watch me take that once just before the candle closes when it comes time to taking a trade. I'm hoping I can get it done within the next 3 minutes because this has been a pretty long trend down. And I don't want to edit a whole bunch of videos, so we're doing everything live. And you're going to see if I fuck up or anything like that. No editing. All right, we got one going up. Got 40 seconds, 39. See, I'm hoping that this will close above this candle. Doesn't look like it's still gonna. But if I was gonna take a trade for going up, let's pretend, or for going down, I'd wait. We got 6, 5, 4, 3, 2. Yeah, you get the because you always want to get your trade in just before the candle closes. Now, odds are because I'm screwing around, this candle is now going to go up. Never know though. But because I didn't get my trade in right here because of the time, this already came down before I got my trade. That's why we wait. Again, I repeat myself, 1 second before the candle closes. So we got a nice long candle up there. It's probably going to go down, never know, but I'm going to go for a trade going up. So we got 6, 5, 4, 3, 2, 1, trade in. So let's see how it's right there. And because I lost, we'll put $2 in and pray for the best. $1 back. I need to win this one, so I get my $1 I lost and a little bit extra. So there we go. That basically covers it, even though I didn't wait for the bounce off this. I just wanted to give you an idea of when you should be getting your trades in. All right, so I'm going to go ahead and stop the video, and then I'll do another video in regards to just this strategy on its own, not using any of this.